Chime is moving forward with its IPO after a successful debut by fellow fintech eToro this week. We'll preview the upcoming Chime IPO and discuss the potential for customer and retail IPO access. Plus, Hinge Health and Mountain have their IPOs scheduled for next Thursday. Are IPOs officially back? A busy week in IPO Radar news. Rippling, Perplexity, and Addepar raised funds and valuations. Navan and Figma have hired banks for their IPOs. And Apple is partnering with an IPO Radar company to support brain-computer interfaces on its devices. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AccessIPOs.com. And we've got a lot to cover this week, so let's jump right into it. So eToro had their IPO this week, and it was a successful launch. The initial price range of this deal was $46 to $50. They ended up pricing it up from there at $52, above the range. And when we see that pricing above the range, we typically see that as positive, and it's a signal that the stock could rise when it opens on its debut, and that's what happened. The stock was up 34%. It popped 34% at the open. It closed up 29%, and it's trading down a little bit from that closing first day price. But overall, it was a great debut from eToro. We got reports that some readers got access via Fidelity. I haven't heard anything about Webull. I know they were offering shares, but Fidelity was offering, and readers said they did get some shares, even though it was a pretty small float on this one. It was about a $4 billion deal. I think it closed at around $5 billion market cap. Great to see. Now that company goes off of our radar list and off of the upcoming IPOs page, and it's just any other stock now. So we're now focused on the next IPOs, and we have two legit IPOs coming out next week. The first is Hinge Health. Hinge Health was the topic of the third episode of the podcast. It became a victim of the tariff policy or the tariff announcement on April 2nd, but we found out this week that they are moving forward. They initially priced this deal at $28 to $32 a share. It's going to be about a $3 billion IPO or market cap or valuation, which isn't a big IPO, and that could affect our ability to get access to shares. Fidelity is offering IPO access to this deal, and that's the only broker where I've seen shares. If you've seen shares elsewhere, let me know. Hinge is a healthcare physical therapy app that corporations can purchase the service, where the users or their employees can go to Hinge Health for physical therapy and for exercising instructions. So it's playing on some long-term trends with digital healthcare and just general digitalization and improvements to the U.S. healthcare system. So that's going to be a fun one to watch. And then another company is IPOing next Thursday. These are both on Thursday, the 22nd, and these are both on the NYSE. So they're going to price Wednesday night. And I don't know who's going to get the stage at the NYSE, but the other one is Mountain, MNTN. That's the symbol and how you spell the name. And this was not an IPO Radar company. I've really not been paying attention to it. I heard about it in the background. The main reason it's getting attention is that Ryan Reynolds is the Chief Creative Officer. If you know who Ryan Reynolds is, he was on a TV show, Two Guys and a Pizza. I think he's a Marvel star now. I don't watch those movies, but he's also the guy behind Welcome to Wrexham. It's a TV show. And so this guy is a pretty big venture capitalist and entrepreneur and has the Midas touch. This is a smaller deal, around 1.3 to 1.5 billion, and the pricing 14 to 16 is the initial range. And the reason this one is interesting to me, and not so much because of Ryan Reynolds, but because it plays in the same ballpark as The Trade Desk. And The Trade Desk is a public company, and this has been a big Motley Fool recommendation over the years, and I've owned it for quite a few years and made some decent money on it. And I don't buy a lot of individual growth stocks, but this is a connected TV company, Mountain. They help brands and advertisers access streaming television and the various ways that can happen. With Ryan Reynolds showing up to the NYSE, this might get a lot of attention. And if people are making comparisons to the Trade Desk, which I am, because they seem similar to me, I don't know the nuances of these businesses. But this is going to get some attention. And with both of these happening next week on Thursday, it seems like IPOs are back. eToro was a good deal. And these two are going to up the profile of IPOs in general, even though they're not huge. Mountain shares are also available on Fidelity. And it's interesting because I haven't seen any shares available on Robinhood or SoFi. It seems like they've been shut out of these deals. So we'll be curious to see if Klarna or some of these bigger deals get on Robinhood or SoFi. Fidelity's been the benefactor so far, Fidelity customers. And Mountain and Hinge Health are this next opportunity. I put in for some shares. I don't usually get IPO shares at Fidelity, and sometimes when I do get shares, it's an indication that the demand isn't very high because my account isn't as big as some of the bigger clients. So we'll be watching those two. Along those lines, eToro, being a fintech that went out with a successful debut, We hope to see Klarna maybe being the next IPO. They need to update their filing to let us know what the terms are before they can move forward. But we also had Chime release their S-1 filing this week. And Chime was another victim of that April 2nd tariff announcement. We heard from the Wall Street Journal 2 days later that Chime was going to move forward probably that following week, and it didn't release its S-1. Chime has released its S-1 now. It came out on Tuesday this week, the 13th of May. So if you're unfamiliar with this company, it's a technology company. It's known as a neobank or an app that provides banking services, checking, high-yield savings, payments, credit card, that kind of thing. Generally lower costs for their customers. Chime was co-founded by Christopher Britt and Ryan King. These guys were industry veterans that saw an opportunity. The larger traditional banks were not providing the kind of services that people with incomes under $100,000 need. These traditional banks were charging fees on delinquencies. They needed those fees and those overdraft fees and that type of revenue. They needed those fees to pay for their branches. And so these founders, Britt and King, decided there was an opportunity to make a mobile banking app first that catered to people who have different banking needs than wealthy people. So Chime is a technology company, a technology app and a banking services app, but Chime is not a bank. Now, these neobanks that aren't technically banks, they have to tread carefully in the way they market their service because even though they provide banking services, they're not a bank. They partner with banks. So Chime is partnered with the Bancorp Bank and Stride Bank, which are members FDIC, and that's an important distinction. A lot of these neobanks have this model where they provide the app and the technology, and they partner with a bank who provides the FDIC insurance. So customers can feel that their money is secure because it's deposited at a bank, even though they have the convenience of one of these technology companies. And Chime's been a first mover on this model. So Chime makes money from interchange fees and not punitive costs or punitive fees like overdraft and account charges or account fees just for having your money there. A lot of you know I have another brand, Retire Before Dad is my personal finance and retirement brand. I did some bank reviews for Time.com. And as I was doing some Time.com reviews and as I was choosing my own bank, because I had a traditional bank that I wasn't happy with, it didn't treat me well, so I was looking for a new bank. And I went researching new banks. I was shocked at how these legacy banks with the branches just don't have good models for people that are under $100,000, that people aren't wealthy, who don't want to be nickel and dimed by their bank. Where I'm from, the bank pays you, right? You put your money into savings and you earn interest on that. And when you get nickel and dimed on checking or whatever fee or overdraft fees, you're losing money. And so Chime really caters to that kind of customer. There's a lot of really lousy services out there. I won't mention any names, but there's some other big players in this fintech banking services space that offer things like payday loans or paycheck advances that there's a lot of hidden fees. So one of the things that stands out at Chime is their customers really like their services, and they're moving more and more of their banking services to Chime. So the timing of this thing, it came out on May 13th. We would expect to see this IPO happen probably in the second or third week of June. There's going to be a few weeks while they gauge demand. The IPO Roadshow will come out. They'll update the terms. And so in June, we should be expecting this one probably in the second or third week. If I had to guess, I'd say the second week. Now, Chime wanted to IPO back in 2021, 2022. If you remember back to 2021, it was a time of euphoria in the IPO markets. Things were going crazy. There were SPACs. There was really overvalued IPOs, and Chime wanted to join in. And in October, they talked about that they were planning to IPO at a $35 to $45 billion valuation. They hired Goldman Sachs. And of course, in 2022, things fell apart. So Chime has had aspirations to IPO for quite some time. They were a little late to that party in 2021, 2022. And here they are, and the valuations come down a bit, and I think that's healthy. I'm looking at some secondary marketplace data on Caplight. It's showing at about a $11.3 billion valuation right now. It's much lower than 25. We'd much rather see a company come out at a fair valuation and grow from there rather than come out at an inflated valuation and crash, because that's how retail investors get hurt. So we're seeing a pretty fair valuation in the secondary markets. If Chime can come out at a competitive price or a fair price, then if it truly is growing the way it says it is, then retail investors can participate either by buying into the IPO and holding or just buying the stock when it goes live. I think there's a decent chance that retail access will come with this IPO. There's no indication in the S1 right now that there's going to be a directed share program for customers. We'd love to see IPO access for customers. Chime doesn't have a brokerage arm. So for them to offer IPO access to their customers, they would need to partner with another broker like a Robinhood or a SoFi or someone else. And I'm not sure that a fintech like Chime wants to have all their customers go and open up other accounts with competitors that offer banking services. And so that might throw a wrench in customer access to the IPO. Retail access is a different story. The way that the underwriters distribute the shares is sort of a foggy thing that we don't really understand, but it's possible we could see Robinhood get some shares out of this and offer those to retail investors. It's possible that SoFi will get some, or Webull, and certainly Fidelity is always a possibility. With Morgan Stanley leading this deal, I think there's a lower chance of retail access. I've seen more retail access anecdotally with Goldman Sachs and JP Morgan. They're secondary on this deal. Whenever Morgan Stanley leads the deal, I feel like they're a little more stingy about shares. And I think that's because they offer IPO shares to their customers through their RIAs and their network of wealthy clients. And so this may be big enough for retail investors to get shares if it is a $11 or $12 billion deal or bigger, but there's no indications right now in the S-1. Usually we do see the directed share program in that initial filing, and we're not right now with Chime. So fingers crossed we get some retail access, but customers, monitor your emails. So that day that the amended filing comes out, check your email to see if they're offering you shares. We'll read it in the S1. I'll update the page on my website just in case, and of course we'll mention it here if we see it and the timing works out. But right now, no indications of retail access for customers. Fingers crossed we get it for customers in the future, or any customers of some of these brokers that offer access like Robinhood, SoFi, or TradeStation through their partnership with Click Markets. A couple quick highlights on the Chime IPO. Active members, 8.6 million. That's up from 7 million in April 2024. So decent growth, and I'll show you a chart on that. I like this 67% primary account relationships. That means that 67% of their customers are their primary bank. They get their direct deposit through Chime. And so that's a great number. You have 54 active monthly transactions per member. This S1 has a lot of good metrics. This company seems to be very data-driven. They are telling the story of growth. Revenue growth has gone from 1.278 billion in 2023 to 2024, 1.673 billion. So solid revenue growth, and you can see the net income still negative, but on its way toward positive. So we like to see that. There's also several of these very easy to read charts in the S1. Right now, I'm showing active members. So we define active member as a member who has initiated a money movement transaction on the platform in the last calendar month. And there's a chart going from Q1 22 at 4.7 million to Q1 2025, 8.6 million active users. So that's obviously a key metric. And I like this average revenue per active member, this RPAM, which is revenue generated in the calendar quarter multiplied by 4. So this is essentially a look at annual revenue per user. So in Q2 2024, it was $218 per customer. And in Q1 2025, it was up to $251 a year. So that's annual revenue, or average revenue on an annual basis. It's a very clear metric that I think everyone can understand. You're increasing your number of customers, you're increasing your revenue per member. And then this third one I really like is this product attached. So it's number of products used each month per customer. So not only do you have customers, but you have products per customer. And when your customers or your members are using more products, that's going to correlate to revenue. And so we have this RPAM by products used, and customers who have just one product, the revenue is about $68. But if you have 6 or more, it's $442. So this is a company that's growing their customers. It's growing the services that they can offer their customers. And when they grow the services they offer their customers, it grows revenue. And this is all very nicely laid out in this filing. Now, I don't see this company growing gangbusters, but if your customers like you and you're not charging annoying fees and it's convenient and banking on the go and you don't have branches to maintain, this looks like a pretty solid business. I'm not recommending you buy or sell it, but from the looks of this S1, this is a solid company that is IPOing. We don't want to see garbage IPOing. We want to see these quality companies IPOing so that other quality banks or banking services companies will go public. And there's a few other ones out there. Revolut is a really large one that gets a lot of attention. Mercury is another one tailored toward businesses. So the Chime IPO coming up in about a month. Hopefully it's another one of these quality IPOs that opens up higher and gives other IPOs in the pipeline, not just fintechs, but other IPOs in the pipeline, the confidence to move forward with their IPOs, because we want to see more public companies. I'm getting tired of just the Mag 7 in my VTI or my total market funds, my S&P funds. I want to see some of these younger companies that have real growth in front of them join those indexes and get out there into the market and let the market decide what the valuation is. In this company, if they keep showing these very clear metrics and keep offering more products and better products to their customers, they keep the customer satisfaction high, this could be a long-term winner. Not financial advice. Invest at your own risk, do your own due diligence. But I just like to see a quality company go public, and hopefully that leads to more companies doing the same. Let's move on to IPO Radar news. These are companies that I've written about and we follow on the website, and I monitor their news. And every week I update all the different companies on my website and anything that's happened. And if you recall, last week it was a very slow week. We had to talk a lot about OpenAI, which gets annoying. This week there was a ton of news. So I want to try to get through all these stories real quick. In fact, there were a lot more news than this, but these are the 6 stories I wanted to focus on because they're all relevant in our space. And maybe there was pent-up demand from last week, and the companies just, for whatever reason, waited to release their news. But several stories here that I want to share. The first is that Rippling has raised $450 million at a $16.8 billion valuation. So Rippling is a SaaS HR company that provides management services for employee payroll, benefits, and expenses. It feels like there's a lot of these right now. There's Ramp, and there's Gusto, and there's Deal, D-E-E-L. And I haven't written about that, but it's in my pipeline. And Rippling and Deal have had this feud going on that Deal allegedly sent a corporate espionage spy into Rippling, and Rippling called him out and has all kinds of evidence. And then Deal countersued, and the drama is never ending with some of these companies. While that's happening, Rippling was raising this money. I'm sharing my screen at the funding rounds right now. This is a pretty formidable company. It raised its Series A in August 2019 at a $345 million valuation. It's not that long ago, 2019. And it's grown from there to a $16.8 billion, almost $17 billion valuation in its Series G. The CNBC article that talked about this deal says the IPO is not imminent. And you can interpret that how you like. Not imminent could mean not tomorrow, but it could mean that there's something in the works. But this is a company that's approaching $20 billion valuation. It's a SaaS, so the metrics are very clear. It's raised money in a Series G, which is pretty late, so it probably should be moving toward an IPO. Parker Conrad is the founder. He previously founded Zenefits, a very similar company that came under regulatory scrutiny. He resigned from that company due to inadequate compliance controls, and he went on to raise money to start Rippling. So it's got some pretty big venture capital investors, including Sequoia, Green Oaks, Kleiner Perkins, Founders Fund, Y Combinator, Coatue. So top-tier venture capital firms that do want to liquidate their shares. Of course, these guys can liquidate when they want. They can do private offerings or tender offers. They did do a tender offer last year in 2024. So they have found ways to provide liquidity to employees and to investors. That's the way venture capital has been going, providing tender offers to your employees if you're not going to go public. Of course, we want to see the IPOs happen. And so Rippling is definitely on our radar for one that could be in the pipeline, maybe within a year. Again, once that window opens, a lot of these companies are going to see an opportunity to raise money and move forward with their IPO. Rippling is a solid company, so we're hoping to see that one move forward. Next up is Addepar. Addepar raised $230 million at a $3.25 billion valuation, also at a Series G, which again is late in the game for venture capital. Once you get to E and F, it's really time to go public. We're seeing more and more companies wait. Databricks, I think, is on G or I, something like that. We have 2 companies here at the Series G raising money. Addepar is also a SaaS for wealth management. The company provides a data platform for wealth management, enabling registered investment advisors, RAs, to monitor and manage their clients' assets across complex investment portfolios. The Addepar founder is John Lonsdale. This guy was an intern at PayPal with Peter Thiel and Elon way back in the day, so he's been with those guys. He went to Palantir. He also founded a company called Apeiros, which is on our IPO radar. That's a defense company. You know, defense is getting hot, and Peter Thiel and those guys are all involved. Not an exciting company, although John Lonsdale is high-profile guy. He's well-connected. I think he runs 8VC. That's his VC firm. Valor Equity Partners, Thrive Capital has invested here. Software is trusted by more than 850 firms, more than $4 trillion in assets. Actually, it's up to $5 trillion. So legit SaaS company here with a well-known founder, well-connected founder, but only at a $3.25 billion valuation. We'd like to see this being the last round, and so we can get this company out into the public markets with an IPO. Could stay private, we don't really know, but it's one that we watch. Addepar, the name, not the best company name I've ever heard. There was a 2016 interview with Lonsdale by a website called Cleverism. Said, Addepar, yes, it's a funny name. I think these things are difficult to name. In this case, it's from a quote from Ovid's Metamorphosis, digging deep here. So I guess it's a common expression in the Roman world. Ade parvum parvo magnus exervis erit, which means add a little to a little and you'll have a great amount, which is a metaphor, I suppose, for compound interest and building wealth through this platform. So, solid company, not the best company name, very solid founder. Hopefully this is our last round. We see them moving toward an IPO. So next up is Perplexity. Perplexity raised at a $14 billion valuation. Now, they were talking about this being an $18 billion valuation back in March. Bloomberg had an article, didn't quite make that mark, closed this deal at a $14 billion valuation. If you're unfamiliar with Perplexity, a lot of people in venture capital hope this is a Google killer. It's a search engine, and if you haven't used it, try it. It's perplexity.ai. It's a great user interface, a great user experience. What I've always seen as the most important distinguisher of Perplexity is it always has sourced its answers. So when you type in your query, it will answer your question, but it gives you very clear sources and it puts them at the top. So people click to that source. And this is important to me because I'm an online creator and I have websites. And so when people are looking for information, they used to just go to Google, click a link and come to my site. Now Google's just telling them at the top. And Perplexity is doing that too, but they're doing it in a way that sources the material. And typically you want to go to the original source and not just trust the AI because the AI is not always right. So Perplexity is a very, very good user experience, growing like gangbusters. This is up from $2.5 to $3 billion back in April of 2024. So 13 months, and we got about a 4X on this company for anybody that got in that earlier deal. I have seen Perplexity on the pre-IPO marketplaces all over the place, really. They've been pretty clearly raising for this company several times since last April. In October, it was aiming to raise $500 million at an $8 billion valuation. And then in November, it says they were near a $9 billion valuation. In December, they closed at a $9 billion value, growing quickly. And I think just a lot of venture capital investors who are not aligned with Google or missed out on that Google opportunity so many years ago, they see Perplexity as a way to play that. Now, Perplexity is up there with OpenAI in terms of how much news they get. Their PR company is putting them out there with a lot of news. They're very active on X, on Twitter. And so sometimes I think they're just saying things to try to get attention and publicity. They indicated interest in buying TikTok and they wanted to open source the algorithm. They want to buy Chrome. If Google has to divest of Chrome through its legal problems, Perplexity came out and said they want to buy Chrome. They also said they're building their own browser called Comet, and they're not shy about telling you that they're doing it to collect data and to help train their AI models. I think this search engine actually taps into the various AI models. They don't have their own AI model, but they're certainly not shy about saying that they want to essentially become the next Chrome by building a browser that people like and use, and then that way they can collect their data just like Google has perfected that. Doesn't mean they're going to succeed, but try it, perplexity.ai. It's an excellent experience, and the company is really growing. It's one that we're watching. It's one that is investable if you keep your eyes peeled on the pre-IPO marketplaces. If you want to get in this thing at a $13 billion valuation, it's probably possible at this point. I haven't seen the revenue numbers or the due diligence, so make sure you get that information if you're thinking about purchasing a stake in this company. We do hope it will be another IPO in the future. And if these AI companies like Cerebras come out, CoreWeave had a pretty good IPO. And if more AI companies come out with their IPOs, I think Perplexity would take advantage of that, raise their money, and go public as a not profitable company if it meant raising a lot of money and becoming public. So keep an eye out for Perplexity in the next 2 years, maybe. We could get some activity moving forward with an IPO, especially if the window stays open and the markets are favorable to IPOs that go live. Navan is a travel and expense management SaaS. It used to be known as TripActions, changed its name to Navan. The company name is derived from the words navigate and avant, the art of navigating the world with ease and grace. It's been talking about going public for a while. The big news is that they've hired Goldman Sachs to run their IPO, to lead the IPO. And that's a good sign because Goldman Sachs is a little bit more friendly toward retail investors when it comes to offering shares. So we like to see that. But this company has been saying they're close to an IPO for a while. Back in May of 2024, they said they're not far from an IPO. In April 2024, they said they were targeting an April 2025 IPO. And then in August of 2023, they said they were targeting an April 2024 IPO. And then you go back to 2022, Business Insider reported that they filed confidentially for an IPO as TripActions back in the day. This company had a Series G in October 2022, valuing Navan at $9.2 billion. Crying wolf a lot here in the IPO, but you hire a bank, the window's open, other companies are having successful IPOs. Hopefully it's time for this company to move forward. We'll be watching. Next up is Figma. Figma reported on this just a few weeks ago on the podcast that they had filed confidentially. Got a new article this week that said that Figma has hired Morgan Stanley to run the IPO. I thought it went the other way. Usually you hire the bank first and then you file confidentially. I would think it's more the accountants that are putting together the financial statement. So it appears they have filed confidentially. It appears they've now hired Morgan Stanley. Pretty good signs that they're going to move forward with their IPO. Figma is a design collaboration software as a service. It may be competing with some of these vibe coders like Cursor and Lovable and Replit. But both of these stories, Navan and Figma, showing that they're moving forward. And as long as that window for IPOs stays open, then I think we'll see those by the end of the year. Pretty cool story here to end the show. Apple is working with the brain-computer interface company Synchron, which is an IPO radar company. We started following this after Neuralink. So Neuralink gets all of the press because it's an Elon company and it's raising money. We talked about it a few weeks ago. But Synchron has a similar technology or outcome, essentially, that they are able to connect sensors to the brain and connect that to a computer. And Apple is working with them to be able to control your iPhone or your iPad or your Mac or whatever with your brain. If people who are paraplegic or quadriplegic and can't do those kinds of things, eventually they'll be able to interact with a computer or a device through these interfaces. Neuralink is more of an implantable device. It's implanted by a robot, where Synchron is more of a stent. It goes up an artery or something and goes into the head. I'll share a picture with that on the screen while you're watching this on video. Very cool technology. And from what I understand, they're moving along a little further than Neuralink on their progress. And Apple is probably the best partner you could have. And interesting that Apple doesn't want to work with Neuralink. At least they haven't announced that they're not working with Neuralink. Presumably they'll be working with everybody at some point. But at this early stage with the technology, you got to figure out how to make it work first before you go off and find a couple different partners. So if Apple were able to bring that to people who are disabled, who can't currently use devices with ease, then this is really an extraordinary technology that we can be very, very excited about just as humans and as people who care about the disabled. Extraordinary technology that Apple is planning to work with these brain-computer interface devices. Fun to watch. A name like Synchron that's been on our radar for quite some time now, partnering with the largest company in the world to do something really extraordinary. That's all I got for the show today. If you like this content, you can support the show a couple different ways. The first is to like us or follow us wherever you get your podcasts or your video streaming, YouTube, Spotify. I had a listener reach out and said he gave me a 5-star review on Spotify. And I was like, oh, that's really cool. I should give myself a 5-star review. And I went out there, and it's actually really easy. You don't have to write a review. You just hit that star button, hit the 5. Very simple. And then it'll help the show grow and flourish. So I appreciate it if you can go and just click that like button on YouTube or click that subscribe button on YouTube, and on Spotify, follow us, like us, and just hit that 5-star review. You can also subscribe to the Access IPOs newsletter. Go to accessipos.com. It's right at the top of the page. There's a free download, the IPO process going from startup to IPO, just a one-pager download you get for free just for signing up for the newsletter. I send an article once a week. Not a big deal, just a quick overview of what the podcast is about and a couple other items, typically not in the podcast. When I do a new radar company, I put it in there. If there are other stories that come out after I record the podcast, I put them in there as well. Emails come out Sunday morning, 10 o'clock, so you can read it without worrying about work. And it's free. And finally, check out the notes in the descriptions for links to our partners and for a link to the Access Club. This is a membership community where I share more timely news and deal alerts. There's a community of investors there where we have a chat if you want to join the chat, or if you just want to support the show. It's on Patreon. Just go to patreon.com/accessipos to become a member. Shout out to the new members who joined this week. I appreciate your support. It's only $5 to sign up, and all the proceeds are going to go back into the show and producing a better show over time as the audience and the membership grows. So thank you for your support. That's all for the show. Thank you for listening. Thank you for watching. And I'll see you with a fresh new episode next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.